The iShares Currency Hedged MSCI EAFE ETF (HEFA) is an exchange-traded fund (ETF) that aims to provide investors with exposure to the performance of companies in developed markets outside of North America, while mitigating the impact of fluctuations in foreign currency exchange rates. The MSCI EAFE, Europe, Australasia, Far East, Index is a widely used benchmark for international stock performance, and HEFA tracks this index after hedging against currency risk. This means that the fund uses financial derivatives, such as currency forward contracts, to offset the impact of changes in exchange rates on the value of the underlying assets. HEFA is a good choice for investors who are looking for broad exposure to international equities, but want to reduce the risk of losing money due to fluctuations in currency exchange rates. This can be especially useful for investors who are concerned about the impact of a strong US dollar on the returns of their international investments. The fund holds a diversified portfolio of large and mid-cap stocks from developed markets outside of North America, with a focus on the countries of the EAFE index. The top sectors represented in the fund are consumer discretionary, financials and information technology. The top countries represented are Japan, United Kingdom, and Switzerland. HEFA has a relatively low expense ratio of 0.32% and it is considered a passively managed fund, as it seeks to track the performance of the benchmark index. The fund is also considered liquid, as it has a large amount of assets under management and trades on a daily basis on the stock exchange. Investors should note that hedging against currency risk does not guarantee a positive return, as the performance of the underlying assets still plays a major role in determining the fund's overall performance. Additionally, the use of derivatives can increase the fund's overall risk, as these instruments are subject to market and counterparty risks. Overall, the iShares Currency Hedged MSCI EAFE ETF (HEFA) is a good option for investors looking to gain exposure to international equities while mitigating currency risk. However, investors should be aware of the potential risks involved and should conduct their own research before making any investment decisions.